Welcome to the Zandbergen Report, where wealth strategies and investment wisdom collide, featuring your distinguished host and certified financial planner, Bart Zandbergen.
Welcome to our show of Dream Chasers and Wealth Makers. We are thrilled to be back in studio today. Well, kind of in studio today. We'll talk about that in a moment. With a new episode of the Zandbergen Report. As your host, I'm proud to bring you the movers, shakers, and difference makers who are passionate about sharing what they have learned and what you need to know today. Today, we are in studio virtually, Letitia and I, as we are embracing the stay at home. So we are working remotely, not wanting to put Paul at any risk.
That's right. Paul, it's all about Paul.
And or vice versa.
Yeah, right. Yeah, right. Yeah, you never know.
So thanks to advanced technology and Paul's experience, we're able to do this remotely. So welcome to the show, everyone. And Tish, thanks for joining me today.
My pleasure.
If there's anybody who wants to hear from somebody, it's their financial advisors right now, right?
It's true. And let me tell you, we've been on the phone nonstop making sure people are taken care of.
I'll bet. Yeah, no. As I know you guys, and I know this is a serious issue we're all going through. So what would you like to talk about today here? How do we help people today?
So we thought we would talk about what the issue is, what's happening in the financial markets and in the economy, and then perhaps some anecdotes and some peace of mind that may help people to feel better over what's happening.
Okay. I know very little about these phases here. I will say this, though. I've seen some anecdotal evidence of, not markets, it has nothing to do with markets, how people are home and they're frightened. They're afraid. They're alone for the first time. I'll give you an example. So my next-door neighbor is an IT guy and works from home. I rarely see him. He just waves at me. He comes over. He saw me home over the weekend. He knocks on the door. He wanted to talk to somebody. He just wanted to talk. So I think the power of these podcasts is, hang in there, folks, and we'll talk to you. We'll keep talking to you from wherever we are. And I think part of what people want to hear is not just how bad it is, but how people are getting through this. You know, give me the stories of what – I don't have to know all the answers. You don't have to sugarcoat it, but I just want to hear – tell me a story how people are getting through this.
Yeah. I think that's great. And we have we have clients that are businesses at home and or some vendors that we use, and they're kind of in the same same place.
It's really interesting as a takeaway. We've used Zoom, and it's technology and kind of like what we're using today, Zoom, Skype. There's a lot of technology out there, but we do video chatting and conferencing. We've been utilizing this for a long time. So we can share screens with clients, and we can share graphs and talk and video, and we can see face to face. And we've been utilizing this for a long time. So the transition for us has been really smooth, and it's been an easy transition. But it's quite interesting to hear when I'm talking to other colleagues and other people that it's so wonderful to have a Zoom video because people are isolated at their homes. And it's nice to see a nice face from someone else familiar, and maybe it forces them to take a shower and get ready for the day.
I'll give you one more anecdote on Zoom. I was on a Zoom meeting just the other day talking about some issues and how we're going to handle this and do some shows. And at the end, there must have been 10 people on the Zoom call. At the end, okay, we're all done, and nobody wanted to leave. It's like They didn't want to, don't leave me, you know, just like leave it on over there in the corner. I know somebody's there. I mean, it's that kind of, we're like 6-year-olds again here. Don't turn off the dark.
So, you know, I think our goal today is not to talk about so much what it is. That's gotten beaten to death. I mean, I think 3 weeks ago, if we were doing our show, which we did we even really know what COVID was 3 weeks ago?
No, we were talking about the presidential election.
Yeah,
we were
and how that was affecting.
How it's affecting the markets and our projections going forward and thoughts. We weren't talking about this at all. So this totally caught everyone, I think, blindsided.
So we want to stay away from that because anyone who will turn on the news will see anything and more than they want to see about what it is and how it's affecting people and so on and so forth. So we're going to get out of the health issues of it and really just talk about what has happened and what is being done.
So, Bart, I know these are challenging times. Do you want to start with a little bit of some of the background of other major pandemics that we've had in history and how that's affected our markets and played out over time?
I think that's a great starting place. And, you know, one of the things that Letitia and I have been doing is working pretty much 24/7 if it's not talking with clients and friends and family who come to us for advice, but it's doing research, talking to health professionals, financial professionals, economic professionals, our different wholesale people in our industry. So it's been nonstop. But one of the things that I spent some time doing was doing an analysis of what's happening now and what has happened over history. And there's been many things. If we go all the way back to the early 80s, I think the biggest thing in most of our lifetime, Tish, I think it might be before your lifetime, but the HIV/AIDS, which came out in June of 1981. Did you remember those days, Paul, in the early HIV days?
I do. And at first we thought, well, okay, it's just a minor blip and it's not going to go anywhere. And then all of a sudden it started to, rage through the gay community. And we thought, well, that's where it's going to stay. I'm not gay, so I don't have to worry about it. It's there. It's not with me. And then it started spreading everywhere. And all of a sudden it changed the way we all lived. The carefree 70s where I just, I hate to admit it, jumped in bed rather quickly here, rather quickly went away.
Wow. Okay, Paul, we've learned a lot. That's a lot of information.
I hate to say it. I'm in college. I was right after I was in college. And
But so my point is, so that was, I think, the first in recent times. And then we've had a lot. We've had SARS, which people have talked a lot about recently, the bird flu, H1N1, measles, Ebola, and so forth. Here's a takeaway. So each one of those were terrible. Each one of those caused thousands of illnesses, in some cases hundreds of thousands of illnesses. They affected the market. They affected the economy. People died, all of which is terrible, all of which is happening now. In each one of those cases, and I'm going to take HIV/AIDS out for 1 second, but in each one of those cases, the market at the very least regained its level within 6 months. And then in most cases, between 6 months and 12 months, reached all new highs. So we cannot use history as a for sure barometer, but I think it's a good indicator and something that we have to use. So that, I hope, gives some peace of mind.
And it's hope. And this is just strictly a guesstimate on my part, but I wonder if after a tragedy's over, that hope affects things. We all suddenly hope for the future. Right now there's no hope, and then when we get out of it, we're filled with hope. Yeah,
and there's a great quote that I've come across a few that I've really embraced, and one of them recently it's a quote: "It's never as good as it looks or as bad as it feels."
Exactly.
And I think we're kind of going through that now. And I think the recent statement from President Trump was, we don't want the cure to be worse than the disease, or something along those lines.
Right.
I think is relevant as it applies to that. So that's a point.
A really cool follow-up, just so if you're listening today, we have a great graph, and we will post the graph on our social media too after our follow-up, so then that way you can kind of take a look at the historical data from 1980 to 2020, and you can see all of the different data points and what's happened during the market during these different pandemics over history that Bart was referencing, so you can kind of see it over the big picture. And I think my takeaway of what Bart just said in summary is, in the middle of the situation, it looks terrible, but over time, the market does recover and does surpass it, the low that it was at that given point.
Which also brings up a good point. So Letitia and I have increased the frequency of not only some of our social media with more financial data, but also our newsletter. So anyone that's interested can either direct message us or reach us some way when we get you on our newsletter. One of the things that we just talked about is what is the government doing now? And we're trying to keep everyone informed on that, our clients and people on our list. And the one thing that we're waiting for ultimate approval is over the Treasury dumping over $1 trillion of stimulus. And the outline is pretty far-reaching. It's from helping small businesses. And this is actually a separate item, but we'll talk about the extended tax date. Helping small businesses, helping individual employees, helping employees who have been furloughed or laid off and helping the employer to keep those people engaged. I think this is unprecedented. I've never seen any sort of stimulus that's so encompassing.
And you know what's different about it, too, is it's bipartisan. So this is not one. When we went through the fiscal meltdown, there were many on one side or the other that thought this is too much or too little. Some thought too little, some thought too much. There was a lot of debate about should we do this? Is this the role? Nobody. This is a public health emergency that's shut us down in an unprecedented way. And I think that gives us hope. In a world where we didn't think anybody could cooperate, the two sides are cooperating.
So I'm going to challenge you a little bit on that. There's a lot, I think, of that is true, but the reason it's not signed today, it was supposed to have been signed over the weekend because there is now both sides are fighting just a little bit.
Yeah, I think they said they're down to the 2-yard line though, so I don't think it's going to. It's not going to not happen. Let's put it that way. Neither side's that dumb. I don't think. I don't know.
Let's keep on moving. I don't want to get political here. We can go down a pigeonhole, and that's not the whole objective of the call today. But you guys are both right in regards to, yes, we're going to get something approved, but definitely it's going to be a back and forth to get there. Before you continue, Bart, though, you reference if someone wants to get on our newsletter to get our content, can you provide us an information or the email that they can email you at to be getting on our website or newsletter?
They can email either you or I at bart@optivestinc.com. That's O-P as in Paul, T-I, V as in Victor, E-S-T.com, inc.com, or Letitia, L-E-T-I-T-I-A, at optivestinc.com. And just say, please add to newsletter list. I'm happy to put you on.
I'm going to throw out one other thought here that occurred to me as you're doing this. Once this gets to the next phase, something's going to come out of this. We're going to have some sort of stimulus plan. That much is clear. It's going to be confusing. I'm going to need somebody to help me explain it to me, particularly if I'm a small business or whatever. Because what they're talking about is not just simple. It's complex. There's lots of layers to it, right?
Oh, 100%. And we've had many of our small business clients already asking us. And the problem is we don't know what it is yet. We have ideas of what it is, but
because they haven't decided as well.
Yeah. So we have committed to really embrace that and help to communicate that to, our clients and otherwise.
And if you've listened to our shows in the past, that's something that's really important to us. We really want to break the news to you guys and bring it to a tangible conversation that you guys can actually understand, and you can kind of have some tidbits and takeaways that you can apply to your business as being a small business owner.
And if you need proof of that, just go back and listen to the last 2 shows about the Secure Act. I didn't even know there was a Secure Act, and you not only did one show, you broke it down, and I got it, and I thought, why is nobody else talking about it? Well, it was brand new, and and people are consumed with other sorts of things, and it slipped through the cracks. And I thought there's something that affects me as an aging baby boomer that no one's brought to me. So again, the importance of having good people that you trust who are on top of this and can explain it to you in real English here.
Yeah. The next item.
Paul.
Yeah. Thanks, Paul. The next item, when you're dealt lemons, it's best to make lemonade. And so here's some lemonade out of this whole deal.
I like strawberry lemonade myself here.
Okay, cool. We're going to give you some strawberry lemonade right now.
Right,
here's some strawberry lemonade. Paul, you don't have to pay or file your taxes until July 15th. Yeah.
Where's the music? I need music. Some Chinese.
We need a little drum roll or something. I'll find
Anything.
something here. I'll find something here. Okay, I'm looking for it. Hang on. Here we go. Let me see what I got here. I must have a drum roll here somewhere. Here we go.
So,
and while you're doing that, I have to poke a little bit of fun at Letitia here.
There we go.
here we go.
She's the one that gets her taxes done by January 20th.
Yes, I know. She told us that in one of the episodes, and I was laughing. I said, I'm the person out there on April 15th every year, standing in line at the 11:39. Yeah.
I thought 4 months early was early, but now she's going to be 7 months early.
See, there's hope for us.
I'm proactive.
There's hope for procrastinators.
So, I think that, obviously that was an incentive for those who are busy trying to keep their business running and or, come up with the funds to pay taxes. So again, let's look at everything as for what it is. And I think that's a great benefit.
I think it's fantastic because if you look at right now, what's being affected the most is these small business owners and maybe say you have a pool cleaning company or you have a service industry and you want to be able to make sure that you're being able to pay your people payroll and you're not, you're being able to afford payroll and keep things afloat. When you had to maybe pay your taxes, well, now you can kind of utilize some of those funds in the meantime to float it. So that's also, and they're talking about I'm sure you're going to talk about for stimulus and loans, but these are the things that they're doing for the individual business owners and individuals in general to be able to help them out.
And what are you seeing with your business clients? And this is just this is not a predictor of the future. I'm just right now today that we're doing this on March 24th. So if you want to listen to it further, it seems like the tale of two cities. I see some big companies, Apple, for example, said they're going to continue to pay their store employees even though the stores are closed. Others are finding ways to try and help them and support them rather than just lose the whole team. And then there are others. I heard some bad stories. I won't name the company. Literally laid off like 80 or 90% of their employees. So from one extreme to the other. I mean, that's what you'd expect. They would just dump everybody and then lay low and then hope to hire them back. But I don't know. Is that really what's best for? It might be best for them. Is that best with the economy? Is that what's best for everybody?
Well, I think that's what Trump's statement was just last night. Was let's not make the remedy worse than the disease. So
yeah, right.
Hopefully we'll get through that and we'll get through the disease and everyone will be healthy. And at the end, not to get too deep or philosophical, but I think it's going to be. I think we'll have a different attitude. I mean, I am on life, on people and relations. I think it's going to be a slightly different world.
I remember after 9/11, another once in a black swan event we thought we'd never see again here. I've lived through 2 or 3 of these now, the things that can never happen that did. And how devastated everybody was, how frightened everybody was, and how we pulled together in a way I hadn't seen since I was a kid. I think there is potentially some upsides to this because it does bring out the better angels in us.
Yeah. All right. So as far as the details, we're going to wait till they are actually announced. I'm going to talk about some things that are, I think, really related and help people give them some peace of mind what's happening with the market. By the way, just as FYI, today was the biggest market increase since the 1930s, both points and percentage-wise. So not too bad. And that's going to be relevant to one of my points here. But here, the first one is, and it's I'm going to try and describe a chart to you. But if we go back to 1980, 75% of the years since 1980, the market is positive. In some cases, pretty significantly. But in over 90% of the years, more than 90%, there was some time intra-year during the year where the market was below zero. So here's an example. At 1980, at one point during the year, the market was negative 17%, and it closed up 25%. And I could bore you and go every year from 1980 through 2000 to the year to date, where we are so far, and give you those same sort of statistics. So just because the market is down at some point during the year doesn't mean it's going to end down. This is not a promise that that's going to happen this year, but stranger things have happened. 1987, Paul, you and I lived through 1987.
Yeah,
remember
right.
Black Monday?
Yeah.
1987.
President Reagan actually went on national television that night. It tried to calm the country because they thought this is a repeat of this is going to be 1929 again.
So 1987, the market bottomed at negative 34%, ended the year up 2%. So anything is possible is the takeaway there.
Do you think that, again, I know I'm not asking for advice. We're just guessing here today. Is it the uncertainty of how big this thing is, how big it's going to be? It's the tale of two cities again. You look around, I don't see anybody sick. I don't know anybody sick. And yet they tell me a lot of people could get sick. Massive numbers could get sick if we don't do these things we're doing. And so I think it's that uncertainty that makes the market just wildly bound around. I mean, we're not thinking sensibly. We're just acting emotionally.
Well, Paul, the market does not like uncertainty.
Yeah, right.
And anytime that they can't factor in uncertainty, you see a lot of volatility. You see, what I mean by that is the market's going up and down because they don't know what's going to happen next. So once they have a better understanding, once we have a stimulus in place, once you're able to kind of see, you're having recovery in China and you're having a recovery in Korea, the U.S., we have an idea of where we are with people's health and being able to kind of surpass what those milestones are, you're going to see it hopefully calm down. But those are the things that market doesn't like, the uncertainty of this unicorn that just popped up.
Right.
And Paul, so that was more profound than you think, that statement.
That's what I'm known for, these unexpected, profound moments here, right?
Because that is one of the critical volatility points of the market is uncertainty. And as you know, 3.5 weeks ago, the uncertainty was more of the presidential election, who the Democratic candidate was going to be, and that was causing some strife in the market. It's almost like, who cares now? This is all about this. But Tish has a good point. So we're from a certainty standpoint, we're getting better news from China, better news from South Korea. Italy seems to be giving us some good news. And as soon as we find out here in the U.S. that we've plateaued and or are declining, I think we can have a rocket ship. But we'll see.
And I'm going to take a slightly different opinion, but I reach the same conclusion. I think even if we knew, let's say it is going to be bad, let's say, rosy projections are not needed right now here, the market would still factor that in. At some point they'd say, okay, this is what the reality is, and here's what we're going to factor it in, and here's how we're going to recover from it. I mean, these people are not here to, they're here to factor in whatever the reality is and how we're going to get through it.
And the market likes to factor in a good 6 months in advance. That's why they look at earnings, they look at projections. And I don't want to get into the weeds in this show today, but those are the things that we look at on a daily basis. And it's when we can't factor in these unknowns, that's what causes a lot of uncertainty.
Exactly. So it makes me scared. Tell me the truth and I can handle it. Tell me you don't know and I'm scared.
Yeah, that's an excellent point. A couple things. I want to close up on two final things. So this is more just a kind of a life lesson on investing. You could talk forever about the strategies of how much in stocks, how much in bonds, diversified portfolio. Everyone has an opinion on that. And we'll see what happens, how this plays out in this current black swan. But if we go back to October of 2007, when the market started crashing, it was March 2009 when it bottomed out, and the market in total was down between that year and a half, close to 45-50%. A pure stock portfolio, it took until March of 2012 to break back even. So that was, a good solid 3 years. A diversified portfolio, in this particular case, it's close. Can
you just explain what a pure portfolio is?
Yeah, I'm wondering what that term means.
So a pure stock portfolio.
So an S&P 500 portfolio that's
doesn't have to be
allocated.
S&P 500, just stocks, just equities. If we use let's use S&P 500. That's equities. What the graph is representing.
Okay, sorry, just to make sure that everyone's following. Okay, so
sorry, everybody, I got kind of my own head.
How long did it take from if you were just purely in stocks?
From March of 2009 until March of 2012, so 3 full years. Just an S&P 500 stock portfolio to fully recover, get back to even.
Get back to where it was.
For where it was October of 2007.
Got it.
Okay.
And then what about a diversified portfolio?
So a diversified portfolio, in this particular case, a 60-40, so 60% stocks, 40% bonds. It took till October of 2009, so 6 months. Wow. So the point there is not that it grew faster, but that it lost less. So the takeaway from here is there's going to be years where the stock market's doing great. You're going to feel really good about or feel compelled to move more and more into stocks. This isn't advice. This is just giving you some statistics. We have showed that the tortoise versus the hare, so a portfolio is slightly more diversified, will have less losses, which means you have less to regain.
And I want to add one note just for compliance is just so everyone knows we're not giving financial advice and telling you to invest in a 60-40 allocation. It depends on how long you have to invest. It depends on your financial conditions. It depends on your risk tolerance. And we analyze all of that. So just making sure that we're just showing how the journey would have been if you had two different styles of portfolios.
Thank you for that. You've saved my compliance rear end.
We have one more. We have one more, Paul, that we can go through
one
real
more.
quick.
Okay. Sure, this is priority. We're giving you extra moments here.
So we have had some what we will call capitulation, and that means we've had very, 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 very few clients. Mostly it's people we just hear just out there, but have said, can't take it, too much heat, want to get out. Again, not judging, but here's what we can tell you. If we look at the last 20 years, the stock market now, stock market meaning the S&P 500, has averaged 5.10% per year. So a $10,000 investment in January of 2000, by March 13th of 2020, so that was last week, would be worth $27,322. So the average has gone down. Stock market average was higher until we started having this additional volatility. Here's my point. That's fully invested. If an investor missed just the 10 best days, so the 10 best days in the market, like today could potentially be a best day. It's the best day.
Here's a good example. If a client called last week and said, get me out, and then they missed today, would have been a good example.
Exactly. The return would be, instead of 5.1% per year, 1.36% per year. So instead of 27,000,
just missing 10 days,
missing 10 best days
out of 10 years.
Correct. And here's another interesting tidbit for you, Paul, so that you become even more profound than you already are. 7 of the 10 best days occur within 2 weeks. 2 of the 10 worst days.
Wow. Say that again. The 10 best come right after the 10, the darkest right before the dawn?
The darkness right before the dawn, right. So 7 of the 10 best days occur within 2 weeks of the 10 worst days.
Doesn't mean it's guaranteed.
Have occurred.
That's the most interesting takeaway yet here. And it explains to me why the $10,000 I put in my mattress back 10 years ago is still worth $10,000.
And I'll give you one last, and it's very related to that. So we know that a pure stock portfolio is average 5.1%. A diversified portfolio is around the same historically. You're my compliance officer.
She's checking everything here.
You're welcome, Matt.
So the average investor over that time period has earned 1.9% per year. So why do you think, Paul? This is the investor, one who invests on their own and or is calling their own shots. Why do you think, Paul?
Because as my dad said, I always knew the stocks to buy. I never knew when to sell them. And so he always sold them at the wrong moments. He sold them when they were down and bought them when they were high.
Actually, I didn't think you were going to get there, but you did get there. So it's the individual investor who gets nervous, gets out. And Letitia and I talk about this all the time. Way, way more critical of a decision is not the day you sell, but the day you buy back in. Because if you buy back in after 3 or 4 or 5 of the best days, you've got not much less, not much juice left.
I have a patented technique. I buy high and sell low. Very easy to do.
We'd like to change that. So if you ever need our services, we can go specific.
It hasn't worked for me, but I'm very good at it. So if anybody wants the other thing, I'm very good at buying high and selling low.
All right. So we want to thank everyone for tuning in this week. I know it's been, for those who are listening real time, it's been a crazy time, but we are going to get through this. We'll get to the other side. Thanks for listening. Please be sure to reach out if you have individual questions.
And we will be here on the air. We're not going away every week. As the roller coaster ride gets a little less bumpy, as people start to figure out what's next, that's the next thing I think everybody's going to hear about, not just how we got through it, but where are we going next? How is the world's going to change somehow. And
we will help you drive this ship.
I think because that's going to lead to new opportunities, and other industries are going to be devastated and certain new industries are going to be born. That's what always happens out of these things.
All right. Thank you, Paul. Thank you, Letitia, for joining me today. Everybody have a great week. We look forward to being back in virtual studio next week. Cheers.
Thank you.
Tune in next week for the latest edition of the Zandbergen Report, Tuesdays at 2 p.m. Catch up on our recent shows by visiting bartzandbergen.podbean.com. The Zandbergen Report is also available on iTunes, iHeartRadio, and Spotify. Interested in being a featured guest on our show, or have a question you'd like to hear us answer? Email podcast@bartzandbergen.com. Bart A. Zandbergen, CFP, and Letitia Berbaum, AIF, are registered investment advisors with Optivest Inc. and registered representatives with Gramercy Securities Inc., member FINRA and SIPC. Investment advisory services are offered by Optivest Inc. under SEC registration.